broadcasting around the world. This is the Hard Asset Money Show. Your wealth, your money, your future. Serious talk about what's happening and how you profit. Hosted by Christian Briggs. Follow him on X at BMC_HAM. Live in 3, 2, 1.
One of President Trump's goals behind his global tariff plan is bringing manufacturing jobs back to the U.S. But would there be enough workers to fill an influx of those jobs? In an interview with Tucker Carlson on X, Treasury Secretary Scott Bessent had a suggestion. He says the thousands of workers being laid off from federal agencies could help fill spots on the factory floor.
So what we are doing, on one side, the president is reordering trade. On the other side, we are shedding excess labor in the federal government and bringing down federal borrowings. And then on the other side, that will give us the labor that we need for the new manufacturing.
According to a recent survey, 40% of small businesses overall reported job openings they couldn't fill. That number was 47% in the manufacturing sector, 53% in transportation, and 56% in construction. The Wall Street Journal looked at Labor Department statistics and found there are twice as many job openings in manufacturing as compared to 20 years ago. Aside from the pandemic, America's worker shortage is the worst in a half a century that we've seen. Joining us now, economist Christian Briggs, who is the CEO of Hard Asset Management. Good morning to you, and thanks for being here. What's behind the labor shortage, particularly when we look at manufacturing right now?
Well, thanks for having me. It's a good question. A lot of the young people that used to be going to trades and the manufacturer will be taught kind of more of the specific trades. They're not there anymore. And in fact, if you look at the utilities companies, they have less than 10 years experience on average. In the last, from 2017 to 2022, about 40% of them took early retirement. So we have a shortage of experience, or at least quasi-experienced young people or people that want to work within manufacturing. And
the skills have changed dramatically. I like to say that we don't have a labor shortage, we've got a skills shortage. So, we have unemployment in the U.S. We're at 3-point-something unemployment rate. So there are people out there that are looking for work, and there are workers available, just that they don't have the right skills.
Secretary of the Treasury may not be too wrong. There may be some federal workers that may want to come into that new field because those are high-paying jobs, and we are bringing those jobs back to America. So this actually may work out.
That's interesting. How do you see that process playing forward, and what would be some of the ideal positions? I mean, if I'm a fired federal employee, am I insulted that I'm being considered for a job that is in manufacturing, and how do companies handle that?
Well, that's a good question. I think there's going to be a lot of on-the-spot training. I think a lot of these federal workers will have some of the experience, especially in the financial markets. And if they can do some of those things, they can maybe transition over to literally going back into engineering, or in some cases, you may actually get high-level management positions within the manufacturing fields. But what's interesting, what you said, is the actual training itself. I think because the lack of the workers there, the companies are going to step up and offer free training, or certainly paid training, in order to be able to find the labor force that they're looking for. But we do have a shortage of good quality tradesmen.
And a new report shows that if the U.S. doesn't change course, the country will be almost 2 million manufacturing jobs short by 2033.
And I think this may be an opportunity to take some of those federal workers, and or anybody for that matter, and be able to retrain them into fields that, these are high paying jobs. You look at the auto unions, they're $100,000 a year plus benefits. I think that's going to be very attractive for young people, and especially people coming out of the federal government.
Yeah, I think it's really interesting you bring up the unions, because I've been having some conversations about the impact of unions. And when the idea is to bring jobs here in America, create opportunities for Americans, unions are a big part of that picture. The pay and the longevity and the retirement benefits and all that is wrapped up into that box.
Oh, absolutely. So you look at the unions, they backed President Trump. On this last re-election, he got a lot of support from the unions. The unions love to keep their people working because why? It brings in dues for the unions. And a lot of the unions now have kind of shifted from that far left to more moderate, even kind of center right. But going back to the way in which people work today, those union jobs are good jobs. When they renegotiated with FedEx or UPS or any of the auto manufacturers over the last couple, 3 years, they got really good benefits. I think a person working at even at General Motors is going to make well over $100,000 a year. You've got great health benefits. You've got stock options. And, you know, quite frankly, if you work there 20, 25, 30 years, you got a great pension. And a lot of people look for that job security, but more importantly, they look for the retirement security. You know, a lot of faith is in that, less in Social Security benefits. But, you know, with Trump now bringing back manufacturing.
We have now $7 trillion. Think of this, $7 trillion of commitments from companies wanting to go in, from Apple to many, many companies.
I think we're going to have a huge boom in across the board manufacturing. I think the unions are really going to get behind Trump on this one and really become more of a partner. And then they're going to help him a lot with some of these retired, or in this case, some of the laid off federal workers.
I want to ask you about China, Christian, threatening to add more retaliatory measures after President Trump suggesting an additional 50% tariff. How do you see this playing out?
Okay, so China's the 800-pound gorilla in the room that we don't want to admit does have significant value. Their economy is very strong. And so I think the tariffs are going to be hit pretty hard on them more than us. Trump's right. This is a waiting game. The one thing about the United States is we tend to look a little bit more short-term versus long-term. China plays the long game. They knew this was going to come, but I don't think they realized the severity of it. And I think President Trump is playing hardball, but you got to with the Chinese. The Chinese are used to this kind of long-term conflict to be able to get what they want. But Trump has got a great group around him. I mean, Scott Bessent is a great Secretary of the Treasury. He understands the philosophy of the financial markets. He understands real simple. If you want to get paid for what you make, you're going to have to work with us. And these tariffs that you charge us going into your country, it's just not fair. All Trump wants to do is to bring China to the point where renegotiations take place. American workers get the benefit and the value of those negotiations, and China can still be a great trading partner. They just got to not try to get all of the deal. It's like the old saying is there's too much meat on the bone and they want all the meat. No, that's not how it works. You got to play fair. China will end up losing this trade war. Why? Because we're 3 times the size and they need us more than we need them.
I want to get your reaction in real time. The market's just opening now. All the major indices are up over 3% on the hour. Is this the type of rebound the Trump administration wanted to see? And economically speaking, what's your read on this?
This is a good bounce. This is going to bring a lot more opportunity for investors to get into the markets at a fairly low price. I think everything was on sale last week. I think they were discounted too much. I think the rebound was expected and it was going to continue. And we should see this continue for quite some time. We will win the trade wars and the markets will react accordingly. And this today is a great opportunity, I think, for the long-term investor to get things on sale.
All right. Appreciate your perspective. Christian Briggs, thanks for your time this morning.
Thank you.
Gold has more than doubled in just 5 years, rising from $1,700 an ounce in 2020 to over $3,800 an ounce by September 2025. That's a 124% gain, outperforming the market and proving why gold is the ultimate long-term hedge. As global debt soars and currencies weaken, central banks are hoarding gold at record pace. Why aren't you? Call 844-426-4653 or visit bmcham.com. Protect your future with real assets. Own gold now.